Once again, interest rates are dominating headlines. So as we head into the fourth quarter, I thought I'd give you a few facts and predictions of what I think we'll see in this fourth quarter. Right now, rates are sitting around 6.25%. They're down about 1 to 3/4% from the beginning of the year. Remember though, when we talk about rates in mortgages and stuff like that, it varies depending on your credit score, type of loan, stuff like that. Right now, I think most people are expecting the Feds to cut the rate 2 more times before the end of the year. I think this will happen too. On top of that, though, I don't think that we're going to see as big of fluctuation as interest rate as people want. I think we're going to end the year with a 6 in front of the rate still. We may see a few days or a week or two that fluctuate down and we see a 5, 5.99, 5.98, something like that. But I think even with the 2 rate cuts that we're still going to see rates end the year right in the low 6s. It's also important to know when we talk about rate cuts that it is tied more to short-term rates. Is when the Feds cut, they're talking about the short-term funds. Mortgage rates are more to the 10-year bond or treasury market, I think they call it. So they are kind of 2 different things, but they're somewhat tied together, but they're also not tied together. So we are starting to see or talk to some appraisers, lenders. They're starting to see refis, since the rates have drifted down. One thing we like to talk about is usually a rough rule is 1%. If your rate can go from 7 to 6, 6 to 5, if you can get down 1%, then financially, usually it makes sense to refinance. Another thing to think about is that if you save 1% on your interest rate, a lot of times that will save you roughly 10% on your principal and interest. So if you have $1,500 principal and interest payment and you all of a sudden save 1% on that, you're gonna save about $150. So that's another nice rule of thumb. Final thought I want to talk about is what is the impact on the fourth quarter with rates going down on the Minot market. I think the one thing that I have learned over following the rates and watching them all go up and go down, things do not happen as fast as you may think. Just because rates drop 1%, there's now these buyers that are sitting on the sidelines that jump in. Definitely over time, more buyers that think about shopping or start shopping end up transacting. The lower the rate, as the rates go down, more buyers do transact. But I don't think it's something that happens really, really fast. But I do see it happening throughout the winter into the spring of next year, that the competition will slowly start to rise if the rates keep falling. And if we end up seeing rates with a 5 in front of it, I think that the following 6 months after that, there'll be a lot more competition in the housing market. So I hope you like the general overview of what we're thinking for the fourth quarter and interest rates. If you have any questions about your housing needs, want to sell your house, get a house on the market, or just wonder, what your next step with your house would be, don't hesitate to reach out and give us a call. We'd love to talk it out with you.